New reports show that Canadian home prices could drop another 30%. Or is that just clickbait? Stay tuned to find out. That's the first article we'll be talking about. The second article we'll go over are rents are soaring in Canada as a surge of people goes undercounted. Who's doing the math there? Nobody's counting properly? Yeesh. And if you're looking for some help on how to navigate this real estate market, whether before or after watching this video, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in Greater Toronto area on top of making awesome real estate content just like this one for you. And the first article we got here from Toronto Star is, new report predicts Canadian home prices could drop by 30% or more. Is this clickbait from another great title written by Toronto Star? Kind of, yeah, not really, but I mean, we'll go through it again anyways, just because it's so much content for us to go through. But, you know, like I was saying, even in previous videos, there's gonna be so much of this stuff coming down the pipeline in the next little bit when we compare February year-over-year data, right? So when you look here, the culprit this time is Oxford Economics, similar to UBS. These guys annually have a report that comes out every single year. Toronto's at the top of the ranking. You can choose to listen to it if you want. If not, I'm just gonna break it down for you, okay? I'm just gonna leave it at that. So we got here saying that it's already down 14% from the February 22 peak, okay? So this is one of the things you have to understand. It's more sensationalized when you start from the peak. So the peak was like 1.35 million, and anything from there obviously looks absolutely ridiculous, right? But if you're comparing from a year-over-year number, it's a different story. So in this instance, they're calling it from the peak, at least in this sentence, okay? And they're saying that this is probably in the middle, and there's another 16% drop for a total of 30% drop. So there you go already. In the second sentence is kind of, you know, knocking off its own clickbait. So is there another chance of 16% drop in pricing from here on out? Possibly, right? Now, the other thing they're saying here is home prices could fall by 27% from the peak to the bottom, which is the best case scenario report. So again, let's circle back. They said they could drop 30% from the peak. It has already dropped 14%. So they're saying there's another 16%. So another 27%, which is the best case scenario, is 3% off from their initial paragraph that they're talking about. Cool, perfectly fine. As a record right now, the current prices average, I'm just using the average, they could be using the HPI, benchmark, median, whatever, right? It's at like $1,030,000 right now. So if it drops another 15%, again, I don't want to do live math, it should bring us to like the 800s. So that's going to bring us below pandemic pricing. Do I think it's to get there? Personally, my take, no, it makes for a good headline, right? Now, they're saying in the worst case scenario, if there's a recession and a surge in defaults and insolvencies, the pricing of homes could fall as much as 48%. Look, if there's a recession that comes in, no one knows what's going to happen. It could be a small recession, like they're saying soft landing, or it could be a hard one where like basically wipes a lot of people out, like a great financial crisis. I don't know, right? But like in previous data I've shown you before from CIBC, they think 8% of the mortgages right now are in alternative lending space. So they're probably at risk. Some of it is in private. And then you probably have 20% each every single year that's renewing at a higher rate. Is there enough equity to kind of like, you know, hold that down? Probably. But then you also have a lot of reports coming out saying, look, people are paycheck to paycheck. They can't survive on the interest rate hike. Look, I'll believe it when I see it. There's a lot of people who are calling me to buy stuff. There's a lot of people who are calling me to see if they can survive. And when I show them there's a way to do it, they generally go for it. And good or bad, Canadians are taking on debt to pay off debt just to hold on to their property. Could it be like a giant house of cards? Yeah, absolutely. But if the market changes, do they make a right decision? Possibly too. Again, nobody has any ideas, right? But this is just the worst case scenario. Now, this is quite severe and highly unlikely. So this is what I was saying. And he said that he's more forecasted the total price decline will be closer to 30%. So again, in his forecast at 16%, he thinks another 14% bring us back down to below pandemic pricing right now. Now, but he says that there are other economists out there, namely RBC, they came out with the report, I think 2 weeks ago. I just didn't really talk about it because I was getting sick of these reports, saying that it is 14% decline from the peak, which we already have, right? So these guys are 16%, 14, so RBC is automatically wrong. But he's saying that Toronto's inching closer to the finish line with the prices predicted to bottom by sometime late spring or middle of summer. This is what I've been saying to a lot of people who have been wondering whether they should be buying or selling right now. Look, it depends on where you are, what micro market. I even talked about it in last week's video. If you're buying like houses in Markham, Richmond Hill, or like entry-level homes, if you're upgrading a condo to entry home because you're having a kid, family formation, that stuff incredibly competitive, especially if you're near a school district. Everything else, rather cool. If it's a really good property, it may have competition, but still relatively kind of, cool right over the market right now. Now here's kind of where I'm going to point a couple things out, okay? So since home prices dropped for 11 consecutive months, but so far have reversed less than a third of their 57 price gain in the first 2 years. We did get like about a 57% price increase from the pandemic, but they have not fallen for 11 consecutive months. From August, September, October, prices went up actually like a smidgen, like a 1% being the highest and like 0.3, 0.4. I would say that's kind of a fluctuation. Maybe these guys are talking about like a seasonally adjusted amount or maybe an HPI. Sure, that kind of works. And this is what I was saying, like depending on what data set you're using, these are all kind of to draw your eyeballs. They're not necessarily correct. It could be correct. It just depends on what kind of metrics they're using and what kind of database and what kind of like way of measuring prices they're using. So from my measuring stick, if you're using average price, that's automatically an incorrect answer. But if you kind of even look at all kind of HPIs, benchmarks, all the shenanigans that people do to kind of balance out the price, it's been basically flat. If it's kind of like declining, if whatever numbers they're using, it's declining a very, very insignificant amount that it's basically flat. Now, the last thing that I have here is prices won't be below pre-pandemic levels due to strong immigration and limited supply, says the same dude. And this is why I highlighted blue. If it does drop another 14%, it's going below pandemic pricing because it only takes us another like 10 or 12% from where we are right now to drop below pandemic pricing. So I don't know what numbers these guys are using, but cool, Oxford Economics. This correction seems massive in a normal time. Correct, 30% seems like a big amount, but keep in mind, we already had 16% by these guys' metrics. But if you do it at the back of 50% rise during the pandemic, it's a necessary correction to restore a more balanced valuation of the market. And I agree. Like, are we going to have potentially some more price drops in the future? There's always a chance, right? No one knows what's going to happen. Like if a recession does hit, for anyone who's kind of bullish in the market right now, look, I don't think prices are going to go up because a recession means interest rates drop. What's going to happen is people can't afford their mortgages because they lose their jobs, and we're going to have a huge surge in kind of supply, and then that's going to bring prices down. It doesn't work how recession, rates down, bull market. Does not work that way, okay, for anyone who's kind of calling that. So we're gonna have to watch a lot of the signs and the signals, and I'm still right now looking like 30, 60 days out at most. Right now, things are looking pretty stable. There's just a little bit of uptick in really good properties, but that's it. There's nothing else in the market, nothing else to report on. That's it. Anyways, if you found this content helpful, I'm sure some other people will, because there's so many confusing headlines out there for a lot of people kind of getting clickbait and eyeballs. So if you want to get the good information and kind of get the actual dirt on what the hell is happening in the real estate market, just like and subscribe to this channel. And if you do want to work with me and my team, you can book a call with me using the link that's right here, www.chatwithzen.com. Now let's go to the next article here. It is from Bloomberg. It says, rents are soaring in Canada as a surge of people goes undercounted. I like this title. It's very good, very subtle, So they're saying here, there's another problem, which is that us as a country, Canada being terrible at statistics, stats can't suck, which I agree with, is basically undercounting the amount of homes needed. I believe, I talked about this before, there's a really good follow, Dr. Mike Moffat, he talks a lot about populations and how we're underbuilding because we're using the wrong numbers. This is exactly that, but where this data is coming from is Benjamin Tao from CIBC came out with kind of a report and basically saying we have way too many people because we're not counting non-permanent residents and refugees coming in. And I'm going to talk more about that later. Now you can see here basically saying, they're not including a wave of foreign students, which I've always talked about. The universities and colleges bring in tons of people. We don't house them properly, and now they're able to work full time. So that's a way of getting tons of people in. You got temporary workers, which are bringing a lot of people in and non-permanent visas. So if you look, let's just ignore this chart, but if you look at this chart over here, you can see ranked in every quarter, this is how much immigration we have. If you look at Q3 in 2022, 822,000 people. Just let that sink in for a sec. Our target was 450,000. Q3 got to 822,000. Spoiler alert for next video, we actually made it to 950,000 at the end of the year. 950,000. We more than doubled our expected number. So this is how they say we undercounted a lot of the people who are in need of homes, right? So if you talk here, it says we're underestimating how many people here and how many people require real estate. So I'm still of the belief that, at least in Toronto, rents are probably going to be flat for the foreseeable future unless we increase the immigration target again. And there is a chance, because there's another kind of like global crisis happening in Syria and Turkey. And if we bring in more refugees, yeah, we're going to have housing shortage, because the extra kind of supply that's coming online in the first half of 22 may not even be enough for all the people that's coming into Canada. But at the current moment for Toronto right now, I think we should be pretty flat, because they do have a lot of supply coming online. But if things change in that manner, I would not be surprised if like rents continue going up. And then here's kind of the last part I kind of highlighted here. It says that it's misleading to focus on the number of new permanent residents when calculating housing needs, which is absolutely correct. Because if we have non-permanent residents, which is generally what I talked about, the PR status, you come here, be a student, or you get a work visa, and then after you graduate or you've worked long enough, you can go apply for a permanent residence, which means it converts you into a permanent resident, and that gets piled on top of the kind of permanent residents that they're allowing in. So you're effectively not counting the people who need homes while they're already here. And those people are generally here from 0 to 5 years. Now, they may not necessarily buy, but they, by the way, are exempt from the foreign buyer ban, right? But they're going to be eating up a lot of the rental supply that is needed, which kind of basically just forces the prices of rentals going up, because we're not building enough right now. So this is kind of a crisis that's happening. Yeah, it's not good. It is not good. Anyways, that's a wrap for today. If you are looking for some help on how to navigate this real estate market, whether you're on the offensive or the defensive, and honestly, right now, a lot of my clients are just first-time home buyers or people moving up right now, because that's kind of where the opportunity is. And look, it just makes a lot of sense for them to get in, because it's less competitive. They know they're going to be there for like 5 to 10 years, and they can get like a 3-year fixed right now that's still at like 4.99. It may not be at that rate for a while, just because the rate the rate hikes are coming on the bond side. So I wouldn't be surprised if the fixed market rates go up a little bit next week. So anyways, that's kind of those are guys who are looking. And if you are kind of falling in that category and you look on some help, like people who actually know what the hell is going on right now, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.